All right, everybody, I'm Logan Alec. I'm a CPA. In this video, I'm going to be walking you through a scenario, and I'm going to be showing you tax returns, example tax returns, for a fictitious individual who is low income, but nevertheless should amend their federal tax return for the $10,200 adjustment. Okay. Scenario here is a low-income individual who was not eligible for the earned income tax credit when they originally filed their 2020 tax return before the tax law changed. Okay. Now that the tax law changed, they are eligible for the earned income tax credit, and therefore they should amend their return per IRS guidance. Okay. If you've been following my videos on this, you know what I'm talking about. You know that the IRS has said that in general, the IRS will automatically, adjust your return. Okay, IRS said in most cases, if you already filed a tax return, let me make this big. IRS said in most cases, if you already filed a tax return that includes the full amount of your unemployment compensation, the IRS will automatically determine the correct amount of unemployment compensation and the correct tax. If you paid more than the correct tax amount, the IRS will either refund the overpayment or apply it to other outstanding taxes owed. First refunds are expected to be made in May and will continue throughout the summer. Okay, there is no need to call the IRS or file an amended return. That's for most situations. Okay, I went over these rules on April 1st, a video from April 1st. Check that video if you missed it. Okay, but the IRS goes on to say, however, if as a result of the excluded unemployment compensation, you now qualify for deductions or credits not claimed in your original return, you should file an amended return. For example, if you did not claim the earned income tax credit on your originally filed return because your AGI was too high, but the exclusion allowed for unemployment compensation now reduces your AGI, you should file an amended return to claim the credit if now eligible. Okay, so I'm going to walk you through an example of a fake tax return that I made up. That's exactly the situation. Okay, so here's sample taxpayer. And this is their old tax return, okay? This is the tax return that they filed before the tax law changed, okay? So on this tax return, let's say they made $5,000 in W-2 wages last year, and they received $15,000 of unemployment compensation last year, okay? This individual is single, and they do not have any dependents, children or otherwise, okay? So because on their originally filed tax return, they had total income of $20,000 and they had no children, they were excluded from the earned income tax credit, because if you look at the earned income tax credit table for 2020 here, let me move me up here, you can see that if you had zero children, you have no children, then you cannot qualify for the earned income tax credit if you make more than $15,820. Right? So obviously on this tax return here, this $20,000 amount is greater than the $15,820 amount there. Okay. And so this taxpayer was ineligible for the earned income tax credit when they originally filed their tax return. Okay. So just working through the numbers here, so $20,000 AGI, $12,400 standard deduction, $7,600 taxable income. Total tax liability for 2020, $763. Here's the withholding from the W-2. Here's the withholding from their unemployment. So they had a total of $1,563 withheld in 2020. And so if you take $763 tax due, net that against the $1,563 payments, the withholding, they originally got a refund of $800, right? So in this scenario, on the old tax return that they filed before the tax law changed, this individual got a refund for $800, okay? But now, what does their new tax return look like with the tax law change, right? To exclude the first $10,200 of unemployment compensation received in 2020 from their income. Well, it looks like this. $5,000 in wages is the same, but instead of showing $15,000 here, that $15,000 that was originally their unemployment compensation that appeared here on line 8 is now reduced by $10,200, so they only show $4,800 here. So their total income on their 1040 now, adjusted gross income, is only $9,800. and that is lower than the maximum AGI amount, $15,820, for their filing status, which is single, and the fact that they have 0 children or relatives claimed, right? Because in this scenario, this taxpayer has no dependents here. So now, right, assuming they meet the other requirements for the Earned Income Tax Credit, which you can see on this page of the IRS website that I'll link in the description, right? So assuming they have a valid social, right? Assuming that they're not filing married filing separately, which this individual is not. Assuming this individual keeps up their own home, right? They can't be claimed as a dependent by somebody else. And assuming that they meet the age requirement, right? Because if you don't have a qualifying child, you must be at least 25 years old but under age 65 at the end of the tax year, in this case 2020. So on December 31st, 2020, you have to be at least age 25 but under age 65, right, to qualify for the Earned Income Tax Credit without a qualifying child. So let's see. All right, so going back to let me move myself. Where should I move myself? I'm going to put myself up here. So going back to the tax return, actually I don't like that. I'm going to put myself down here. So going back to the tax return here, right? So now their total income is less than a standard deduction, right? So they have 0 taxable income. So they have 0 tax liability due for the year. And plus, on top of that, they now qualify for a $384 earned income credit that they didn't qualify for before, right? Let's go back to their old tax return. Their old tax return, 0 earned income credit. They did not qualify for it because their income, right, was higher than this limit here, right, for their filing status and number of children, okay? But now they do qualify for the Earned Income Tax Credit because their income is now reduced by $10,200, and now they have this $384 Earned Income Tax Credit. So now, right, their new refund, after their tax liability goes to 0, their new refund is $1,947, right? That's if they had filed a tax return originally that had not taken into account the tax law change, right? So the additional refund that they're waiting for from the IRS is the difference between this $1,947 on this adjusted tax return and the $800 on their old tax return, right? So that's like what, a $1,147 difference, right? If we just take 1,947 less 800, right? $1,147. So they're waiting for a refund from the IRS for $1,147. Okay, but the IRS is saying because they are newly eligible for this credit, and it's not only the earned income credit, it's any other credit or deduction that you were not eligible before. I'm just using the earned income credit because this is a very common example. Because they are newly eligible for the earned income credit as a result of the tax law change, and they were not eligible for this credit on their originally filed tax return, the IRS said that they need to file an amended return to claim the credit, right? If, as a result of the excluded unemployment compensation, you now qualify for deductions or credits not claimed on the original return, you should file an amended return. For example, if you did not claim the earned income tax credit on your originally filed return because your AGI was too high, but the exclusion allowed for unemployment compensation now reduces your AGI, you should file an amended return to claim the credit if now eligible. Okay, so this is a situation of a low income taxpayer who should file an amended return for the $10,200 adjustment. It appears to me. Now, what's not clear here in this IRS statement is my question is, okay, let's say this individual doesn't file an amended return. Will the IRS still cut them a check for the amount without the earned income credit, for example, they're now eligible for? Or will they not send them a check at all? I'm not sure. But just taking the plain language of what the IRS is saying here, you should file an amended return if you are in this situation. Okay, either the IRS will cut you a check not including the credit that you're eligible for, right? So in that case, this this individual would be missing out on an additional $384 refund, right? Or possibly the IRS isn't going to cut you a check at all, right, if you're newly eligible for a credit. But then the question becomes, okay, well, if they know you're newly eligible for that credit, why can't they just calculate it for you, right? So if you do receive a check from the IRS for this, make sure you check the amount of check you get, right, against your own records, okay? Compare the refund amount on your new tax return, your adjusted tax return after the adjustment, to what you originally filed right before the tax law changed, right? In this case, the difference is $1,147, okay? So I just wanted to clear that up for y'all. I received some questions yesterday about this. You know, do I have to amend? Do I not have to amend? So I just wanted to clear that up for y'all. So this seems to be an issue. This whole unemployment compensation adjustment from the American Rescue Plan Act seems to be an area of massive confusion right now, affecting millions of Americans. So I am obviously creating content around this topic. Okay. For those of you for whom this doesn't apply to, no, I'm not going to become an unemployment YouTuber. All right, that's I have broader interest in that, but right now I'm really seeing a lot of pain and confusion right now with respect to this particular topic. So as people ask me questions on this topic, I'm going to continue to create content on this topic to hopefully clarify this. Okay, because I'm not seeing a lot of content out there, right, that's really digging into these questions here on this topic. So I really feel a burden, you know, to apply my knowledge and share it with you folks out there who are wondering about this. I've also received the question, Logan, what states are making their residents amend their return for the $10,200? I am planning on doing a state by state video that goes basically through all 50 states and the District of Columbia, where I basically say, okay, here's the deal for that state. Okay, so stay tuned for that. Right, this video here was just about the federal tax return and whether or not you should amend your federal return. Okay, state is a different animal. Okay, all right, folks, that is this video. Thank you so much for watching. Over here and right down here, there are a couple other videos I made pertaining to the $10,200 tax-free unemployment adjustment. And I'll see you in those videos. Bye-bye.